Apes and apettes, welcome back to the channel. I'm feeling a little bit lucky, so I want to use some tendies and give AMC a little bit of good luck, but I hope you guys are enjoying your Saturday. Tendies actually sound pretty damn good. Get some barbecue sauce, some chipotle. Ooh, let's get it. I'm ready. We're going to order 50,000 tendies and have a meetup after the AMC MOAS happens. But here in this video, I do want to go over a couple things in particular. The fact that Blackrock has increased their position in AMC by over 600%. They now own over 8% of the total outstanding shares in AMC. We are also going to be going over why I think this earnings report is going to be different, and I do think AMC is going to rally. As well as that, we are going to go over another Chinese property developer that is in a bad situation, but I also want to talk about real estate bonds in China and how they are getting very bad. That situation, like I said in previous videos, is still going to take a while to play out because very large companies or sectors of an economy, especially in China that accounts for 25% of their GDP, it takes a while to come down, but when it does, oh, when it rains, it pours, baby. So let's dive into this video. If you guys find value out of it or simply entertainment or just because you like my Valentine's Day hat, hit that like button for me, subscribe to the channel, and comment down below. As well as that, the sponsor of this video is going to be me, yours truly, TCI, baby. If you guys want access to all of our trades in real time, check that link out pinned down below in the top comment. We hit the Snapchat calls. We hit the Facebook puts. That was a trade of the year. That's going to be the trade of the year. $60 into $3,000 or $160 into almost $5,000 per option contract, as well as the forward puts all last week. If you guys want access to that, check that out. Get a little bit of mentorship. If you guys don't know where to start with options, I wish I had that tool starting out. So that's available for you guys, but let's dive into this video. Now, first and foremost, I do want to go over briefly why I think AMC is actually going to rally upon earnings. And I made a video about this, and I got a lot of comments that literally said, like, what ticker are you looking at? You must not be looking at AMC. And that's fair because AMC has dropped pretty much every single earnings report besides, well, the last one AMC dropped. This one was bullish, this one was bullish, and this one was bullish. So we've only had one earnings report, and that was November 8th, that the stock actually dropped after the earnings happened. Now, I do want to point out, and this is really the whole thesis on why I'm saying this, is AMC is not priced for perfection. There is not a lot of good news priced into AMC's earnings. That's a simple fact. We're not sitting at $40, $50, $60 this time around heading into earnings like we were in November. So it's not priced for perfection. It's actually priced for its worst case scenario, sitting at its fundamental valuation. Now, when you see stocks like Snapchat that rally 60% off earnings, literally a straight line up, and then continue just throughout the day, a straight rally to the upside. This was because the stock was priced for the worst case scenario. It was already beaten into the ground over the last, if you pull this up to the 3-month chart, it was already beaten into the ground, sitting at almost its pre-COVID levels, right? Or getting close to that, sitting about July-ish 2020 levels, right? So pull up the 15-minute candlestick chart. You guys can even see off of Facebook's earnings, the stock dropped 25%, 23 to 25%. Don't remember the exact number. It was a lot. And then the stock instantly rebounded off of earnings because it was priced for a worst case scenario. So after this, after a 25% drop, it's almost guaranteed the stock is going to rally because it already dropped 25%. It's not going to drop another 25% and go down 50% in 2 days when earnings, the company's not going bankrupt, right? So it's priced for the worst case scenario, so then it tends to rally upon earnings, even if earnings are not all too great. Take a look at Amazon. Earnings were not great with Amazon. They were actually the worst earnings that you have seen with Amazon for a very long time in its whole history. You've never seen single-digit growth rates with Amazon. Amazon is no longer your huge growth company that a lot of people were hoping it would be for at least a couple more years. That's not the case. But Amazon was down here to its levels in June of 2020. So it's like how much more is the stock going to fall unless you have terrible, terrible news? And what happened with Amazon? Once earnings came out, the stock rallied 14%. That's a big, big move for Amazon. It was priced for its worst case scenario, being down about 7% the day before earnings. And that's exactly what we're seeing with AMC as well. AMC is just straight into the dirt, sitting at those levels that we were at the before pre-squeeze. But AMC is a little bit different because it was a bad company and it, close to bankruptcy. Not their fault, right? The pandemic happened, but you're now sitting at this fundamental valuation of around $15 to $20 per share. That's why so many hedge funds are loading up on AMC. So you're pretty much priced for the worst case scenario. Once the good numbers come out, the profitability, the free cash flow is announced, the trading algorithms, in my personal opinion, are going to bid this stock up immediately. I think you are going to see a rally. It would not surprise me to go to $20, $25, $30 per share if we do see a 30% positive day, or even more than that after earnings. So that's going to be key, and it's only my opinion here, but I do think AMC is priced for the worst case scenario coming on earnings. Now let's get into this Blackrock situation, and this is actually a 13G formed that was filed February 4th. You can see Blackrock previous shares owned of almost 6 million, their current shares of 43 million shares. The percent change of 623%. That's a lot. That is a lot. Bringing their ownership percentage to 8.30%. So over 8% ownership in AMC. Why is this? Because the business has been getting better. The fundamental business, not the squeeze trade, who they don't care about that as much. That's an added cherry on top of your sundae. But the sundae is the fact that AMC is actually improving their business and the fact that the stock has fallen so much. Now, there's something to know with these 13G filings, and that is this. Who needs to file a 13G? Institutional investors must file a 13G within 45 days after the calendar year in which the investor holds more than 5% of the stock as of the year end, or within 10 days after the end of the first month in which the person's beneficial ownership exceeds 10% of the class of equity securities computed as of the end of the year. Now, essentially, to break this down in a little bit of English, if you were to buy 10% of a company's stock, then you would have to report that by the end of the month. Now, if you're accumulating, let's say 4 or 5 million shares a month throughout the year, and it gets over 5%, but less than 10%, by 45 days of that next following year, you have to disclose that in a 13G filing. So that's exactly what's been happening. It just shows the accumulation that Blackrock has been doing on AMC stock, and likely when their 13F filings come out here shortly, you're going to see a massive amount of shares purchased by them, because we've seen, millions of shares purchased here and there, but I have not at least noticed, I should say, the fact that they've went from 6 million shares to 43 million shares. So I imagine here in this new year in 2022, they have loaded up some additional shares, and the percentage change is crazy. 623% is absolutely wild. So that is the scoop there, and BlackRock is going to hold on to these shares. If you do see the stock go to 50, 60, 70, 80, 90, 100, they might sell out some, but they tend to just buy and hold. They're a long-term equity institutional investor, and they are one of the biggest, if not the biggest out there, with $3.5 trillion of assets. So kind of ridiculous, but nevertheless a good thing to see them loading up on AMC. They're the smart money. Sorry to say it. I mean, if they're buying AMC in these quantities, I'm going to call them smart money. They're not the dumb smart money, right? They are actually with us and buying some AMC stock for their own personal benefit. Obviously, they see the value in AMC at the current moment. Now, as far as the Chinese situation, Chinese property group Shimeo feels chill, apes, right? Chill of sector's liquidity crisis. And you guys can see right here that their bonds are trading at 63 cents on the dollar. The company, with a market capitalization of close to $3.5 billion, has been forced to sell its prized assets after being sucked into a property bond market sell-off that has hit China's biggest offshore borrowers. So if their bonds are trading at 63 cents on the dollar, that's a ridiculous interest rate that you would be getting paid. That is like a company that is about to go bankrupt. That's like what you would buy AMC stock in December, around those prices, 63 cents on the dollar. So it's not a good situation over in China. Maybe they can get themselves out of it, but it doesn't look very likely. These boats take a long time to sink and fail, just like you've seen in 2008. Companies were having issues since 2007, late 2006, including Lehman Brothers behind the surface. But it takes a while for a company with, billions of dollars of assets, billions of dollars of liabilities, or I should say hundreds of billion dollars of assets and liabilities. Takes a while for those to go bankrupt. Like Lehman Brothers had $600 billion of liabilities, $600 billion of assets, and it still took them over 1 year to go bankrupt since they actually made that public that they were in troubled waters. So that is going to be all for this video. You guys can see right there, the yields on Chinese junk bonds traded abroad remain elevated. It's not really changed around all too much since Q3 2021 when it did start to go up. Now it's still just ballooned, showing that situation is not getting better. I would expect a bubble popping, for lack of a better word, here in this video by the end of the year in 2022. So that is going to be all for this video. Hit that like button for me, subscribe to the channel if you guys found value or simply entertainment out of this video. Also, check out the pinned comment down below. Go ahead, check out the community down there if you guys want access to all of the trades in real time. Then by all means, feel free to do that. If you guys also want to get some free stock, check out Moomoo, check out Webull and Public. It's not a bad time to get yourself some free shares, and that is your worst case scenario. You get yourself some free money. So don't squander that opportunity. And that's going to be all. You guys enjoy the rest of your weekend, and I will see you in the next one.